thanks for stopping by the Investors Corner here at goldcodirect.com. I'm Trevor Gerst. Though gold showed some gains last Friday, closing out the week with a $19 per ounce move up on investors' moves out of U.S. Treasuries, it still seems to be hovering in the mid-1500s range, pending some word from the Fed on quantitative easing. It's possible we'll know more tomorrow, although nobody's betting the farm on a spectacular announcement from Bernanke. Meanwhile, it's still a summer doldrums watch and wait affair as far as gold is concerned. Gold also seemed to have profited from the release of the Thomson Reuters University of Michigan report on a perceptible decline in consumer confidence, which, in turn, could signal a Q3 move later in the year. The CFTC's commitment of traders' reports has shown a decrease in long positions for gold. While one shouldn't ignore these kinds of reports, it's important to see how they fit into the larger picture. Since our most fervent recommendation is for you to buy and hold the yellow metal for the long term, we feel you can best accomplish this goal by mimicking the goal of the world's central banks. They buy and hold as a hedge against the debasing of paper currency. Doesn't it make sense then that this should be your aim too? According to the World Gold Council, central banks amounted to the 80.8 metric tons in the first quarter of 2012, roughly 7% of the global demand. Turkey has bought 123 metric tons since last October. Mexico has bought 100 metric tons since February. The Philippines metric ton... I gotta read this paragraph. According to the World Gold Council, central bank purchases amounted to 80.8 metric tons in the first quarter of 2012, roughly 7% of the global demand. Turkey has bought 123 metric tons since last October. Mexico has bought 100 metric tons since February 2011. The Philippines, 32 metric tons in March. The figures are also impressive for Russia, Thailand, and South Korea. All in all, this recent increase in gold purchases represents the largest increase since 1964. Once again, you should ask yourself, if the central banks of the world are buying gold and preserving their own solvency through the purchase of gold, what should you be doing to protect your own wealth? Until next time, thanks for stopping by the Investors Corner here at goldcodirect.com.